Welcome to Total Money Management. I'm back with Steve Moriarty. How you doing, mate?
Good, mate. Good. How are you?
Well, yeah, it's...
back to our Saturday routine.
Back to the routine. I'm not in my fancy shirt this time. But yeah, no, we're back to it, back into a bit of a rhythm now, post engagement, holidays and hurricanes.
Yep.
But anyway, this week we're covering March 10th to 14th. What I wanted to start with before tacking this on the end is, if you find any of these podcasts useful and you want to hand them to a friend, it'd be great. And I think it's more of a, from our perspective, trying to get what do you call it, Steve? Get the word out there.
Yeah. Network. Or whatever it is. I don't know. I don't circulate anymore.
Yeah. I mean,
Go and tell people.
Go and tell people. or share the link or whatever you need to do. So there it is. You've heard it before the podcast starts, so you can't turn it off now.
The plugs.
The plugs in
right. You know when you get podcasts, and they say they have the same format like us, sort of thing, right?
Yeah.
We start off and the first, like Meb Faber, I love Meb Faber, but he's got shit house music to start with it, right? And then the first 2 minutes is about buy farmland and blah blah blah. So you just hit that 15-second button, like forward, and it's like, right, okay, start.
Yeah.
So that's what they've just done to us.
Oh, probably. Well, we'll keep talking about it so they can't do it. All right. So this week, the big issue really is Trump again. When this was written, i.e., and it was released on the 15th to the members, the tariffs, there was 200% tariffs being talked about. Yeah. Dropping them to 10. There was all sorts going on. What's eventuated from that?
And it's still going on.
Yeah.
I think generally, look, the reason why there's a period of transition because what we're doing is very big. That's Donald Trump, right? That's an understatement. The longer it goes on, the more I look at it and just think, man, oh man, this is like some serious shit happening.
Yeah.
In all seriousness, the stuff, as I've said before, I don't disagree with what Trump is doing in terms of trade policy, which is you lot have been taking the mickey out of the US. So we've had enough of that, and now you can start, changing, and tariffs are the stick, right? Because we being the Americans, sort of said, look, we'll do this, and if you guys want to play along, everybody will get a benefit, right? And basically the other countries were like, nah, we're not doing that. And I think I said it last week, they basically just dined out on the US. And now the US has said, well, we've had enough of that. So, but the internal stuff that Trump is doing with him and Elon Musk and stuff, that's really dangerous stuff. I think he is trying to set it up where there's no accountability for him. One of the questions is, will they have midterm elections? Which I think is pretty serious, but you just don't know. That's what I talk about with the uncertainty. You have a level of uncertainty. So I might have uncertainty, which is, there's a wave coming in. I can see it. I don't know how tall it is, but man, it looks pretty big, right? So from there you go, okay, well, probably a good idea if I get out of the way, right? The problem with Trump is the uncertainty is so broad, you've got no idea what's going on.
Yeah, like it's a 200% tariff one day, it's a 10% the next. It's nothing the day after.
Yeah. That's what I mean. It's so unpredictable that it makes it really, really difficult for an investor. Because I was thinking about it yesterday, because people sort of say, well, what should we be doing, or what should I be thinking about? And it's like, man, I have no idea other than like, Jesus, like this guy's nuts. In that case, I think in that circumstances, I think you need to talk about the return of your capital rather than on your capital. The argument being, dude, just get it somewhere safe. Don't worry about making 3%, because if you're looking at the return on capital and you're thinking you can hustle 8 to 10, okay, that's fine, but as we've seen the last month, markets move quickly. Tesla's dropped 45% because Elon Musk won't shut his mouth up.
Yeah, I mean, we've been much more defensive over the last couple of years, even.
Yeah. But it's really the pointy end.
Yeah,
I think anyway. The US economy is still going okay, but Jesus, just the way the volatility is getting a lot larger, a lot wider.
Well, we're going off track a bit, but there's a lot of cash flowing between countries now, isn't there? Out of the US into other countries like Europe, and I mean Japan. We've got, I think, in next week's.
Yeah, Europe's bounced back this year, which we discussed last year, which again is just that mean reversion kind of thing. But I also think Germany's now cleared the way to spend 500 billion
on defence.
On defence and infrastructure. Yeah. So that'll catalyse others to do it. I think they were talking about $1 trillion overall. But either way, I think Europe has, this week, Europe has been talking about basically post-NATO. What do we do if we get the Americans out of NATO? Which says Europe has to defend itself, which is not. The Americans wouldn't be unhappy with that because the Americans have been saying, you guys have got to put more money into NATO.
Yeah, I don't think it's an unreasonable question to start asking, regardless of what the situation
Absolutely. Look, the Europeans and to a certain extent, well, to a large extent, Japan and Germany have been doing the same thing. Everybody's in the US market because it's the only place that's dynamic.
Yeah.
Like you look at European returns in the last 15 years since the GFC, they're miserable. Look at Australia's returns.
Less than miserable.
Yeah, they're less than miserable, and that's what I mean. I think America's in a really dangerous position because, again, they've grown such a huge debt bubble because, again, the world trading system hasn't changed. And so Trump saying we're in a transition period, we're going to do something big. I don't think he's lying. I agree. The question is, what does it look like?
Yeah,
and it's like,
is it a good big or a bad big?
Yeah. and I'm a bit like, I don't really know, to be quite honest.
Yeah. Well, yeah. You said something interesting on this week's members commentary about there's 90% of people are thinking tariffs bad and 10% are good. And you're in the 10% camp.
Yeah. I think
which is interesting.
I think it depends. But what I think, Jacob, is we've been in this system, if I can put it to you that way, for about 40 or 50 years, okay? Since mid-70, definitely 80, right? Thatcher, Reagan, Bob Hawke. That's 79, 80 and 82. Okay, so that's 45 years. Most of us don't know any other system. When someone comes along and says, listen, I'm going to shake this joint up, naturally enough, everybody who's benefited from the last system, i.e. the globalised world, says, oh, well, this is awful, right? But again, I think we're going to have to get used to in a really, really seriously different world, which is what we talked about in the new normal, right? You're going to have to get used to, I think, a lot less freedom. Right, economic freedom. Oh, I'm going to buy pearl stones from Poland. It's like, no, you're not.
Not freedom as in you can't fly to America.
Yeah. But see, stuff like China has this thing America has this thing where anything under $800 coming in is not checked and taxes and all that sort of stuff, right? And I'm sorry, the word escapes me what it is. Anyway, they've closed that off, which means, companies like Shein or Temu and all those cheap Chinese companies, they're going to get a little bit hammered. And what I mean is that when you operate in that world, and I can tell you when I was a kid, banks were open from 10 till 3. That was it, right? There was no ATMs, right? So everyone had to hit the bank. There were lots of bank robberies, right? Because that's where the cash was. We all dealt in cash. These days you can do banking anywhere at any time. Doesn't matter. You can shift money all over the world. Well, that people who are used to that are going to find it really hard when they say, no, sorry, you can't do that anymore. right? And it's a really jarring experience because, as I say, we've all been used to having a lot of freedom.
Oh, this thing is interesting. I don't really have an opinion myself, but it does feel like we're going backwards in time almost.
Yes, absolutely. I think we're going back to, and I've said this before, I think we go back to more job security, better pay, but less financialisation. And so, as I say, houses will become just houses, not financial
assets.
Assets.
Okay,
Right.
well, let's talk about the US. I mean, there's talks of recession in the US, but the economy is still going quite strong. I don't get it.
Yeah, well, the prediction of a recession is twofold. One is because they believe a lot of economists believe their government debt is too high. That's wrong. Second part is they believe that if Elon Musk cuts out $2 trillion, which is probably a bit of a long shot, that will cause a recession. Now, they may well be right. The key you have to watch is the government spending and the private borrowing. Just keep your eye on those. And at the moment, they're still quite good. So the US economy is quite good. But that doesn't mean the market, the market's always looking into the future. So they're looking at it going, well, if that happens, the market will fall. And I think there's some of that is coming through now.
Yeah.
And I think part of it is a realisation that Donald Trump means what he says.
Yeah, I mean, it's when forecasts are that volatile in the future, the market tends to price it in a lot earlier. As in, like, well, let's not wait for that moment. We'll sell now or...
Yeah, I think the markets are looking at it. I mean, we've just had a substantial fall in February.
Yeah.
The Mag 7 are coming off. Tesla's dropped 45%, right? There's a fair bit of stuff there where people are going, holy moly, this is, this could be serious. And I think it's, again, at the end of a bull market, when you've made a lot of money and you start to see it ebb away, you start to go, maybe I should sell, right? Because you've got we've had a 15-year bull market where you've 10 times your money, and then suddenly your million goes to 950, then it goes to 9, right? And you're starting to go, I'm starting to get a bit worried about this.
Yeah.
Margin lending dropped in February, right? Now that's a really good indicator of, let's leverage up and hit the market. So there's a range of conflicting signals there. The other one is there's a lot of foreign money in the US market. So, that foreign money might say, listen, I think we're going to get out of the US and put it back home.
Yeah, well, that tends to be the geopolitical conversation.
Absolutely.
Isn't it, right?
Yeah. Well, they took Russians' assets off them. So, there'd be countries looking at the US going, how much do we trust this more? Because it's been a huge shift from Donald Trump. They're booting out people that are legally allowed to stay in the US. There's a whole raft of that stuff going on. And if that continues on, I mean, Britain and the UK and Germany this week issued a travel warning for people travelling to the United States. I mean, you grasp that. People are going, Jesus, mate, be careful if you're going to the... It's like, mate, it's the United States. Yeah. It's like, dude, you need to be careful.
Yeah.
Right? They're looking at people's phones to see if they've been critical of Donald Trump. Well, that's the sort of shit Russia does.
Oh, really?
And China does. Right? That's the way they silence people.
Yeah,
so
the whole free speech conversations, that's actually been quite prevalent, not just in the US, but the UK as well.
Yeah. As I say, it's one of those times where you just have to be really quite prudent and there's nothing wrong with just sitting on the sideline.
Yeah, right? Waiting it out for a year or so.
Yeah, it's not as if your life is going to change because you missed out on the last 10%.
Yeah.
Right?
That's a good point. So Tuesday, we're talking about the Dow tumbling, and this is just more volatility, but Wednesday's an interesting one, which is the buying the dip, right? People always go and talk about, let's buy the dip.
Yep.
It works until it doesn't.
Yeah, and at the end, this is where the end of the bull market stuff becomes really important, right? Because, as you say, buy the dip works until it doesn't. And that's why in the masterclass I talked about the technical indicators, the 200-day, but also you get bear market rallies, and it does your head in, because if it falls 15 and rallies 10, you start to get there like, oh man, I should get back in. So you get back in, then it drops 20 and you go, oh no, then you sell, and then it rallies 20, right? Oh shit, am I in or out of this thing, right? That's where the cape is really useful for a long-term investor, because you can look at it and say, it's fallen from 38 to 35. Okay. There's another 50% to go before it hits 17.
Yeah, you're going to be rebalancing. And psychologically, that roller coaster is a nightmare. When
absolutely. Well, that's why we say you've got to have a systematic way, right? Yeah. And if you're worried about jumping in and out, you haven't got a system, right? You're letting your emotions run riot. That tells you haven't got a system.
Yeah.
Right?
Well, I'll mention it now. We had a State of the Union masterclass last week, whenever it was. I've just realised there's a few thousand people that listen to this that might not have got the memo if they're not if they're not on Instagram. So if you want access to that recording, reach out just on either socials or support at totalmoneymanagement.com.au, and we'll flick the recording through to you. Thursday, what are we talking about here?
Albo pretty quickly flipped the switch to buy Aussie PM urges, and it's like, oh, I thought we were all interested in globalisation and helping everybody. So I'm just simply saying you're going to see a lot more of this, right? And you're going to see a lot more of no, you're not buying those products from there, right? You can buy an Australian one.
But you can't do that because we don't make anything.
Well, yeah, but we've got neighbours who
buy
do.
some Tasmanian air.
Yeah. But you know what I mean. What I'm saying, there'll be stuff where you won't be able to buy it, right? And it's going to be a shock to a lot of people. Or if it is, it's going to be bloody expensive because it'll have a 50% tariff on it or something.
Yeah, true. So it's more of like a neighbour restructuring instead of buying from certain countries or prefer others.
Yeah, it's why I think commodities will do well. There won't be a supply. Well, there'll be a supply shortage, but it'll be artificial because we won't be buying Russian stuff, right? We won't be buying Iranian stuff. So therefore, because if you've only got a limited supply, well, the price is going to fall. The price is going to rise.
Yeah.
Right. So you'll get inflation, and if Trump is booting all these illegal people out of the United States, well, they're going to have some serious labour issues, which means wages will go up. Right. And suddenly all those people who voted for Donald Trump will be saying, well, now I'm paying, $20 for a carton of eggs. And it's like, well, if you don't have people to pick them and, pack them, that's the way it works.
I wonder if he'll make it the full term.
Good question. Anything can happen.
Yeah. All right, Friday. I always like picking on fund managers. I know you do as well.
Yeah,
Steve.
yeah. Well,
so they
easy mark, mate.
Yeah, most fund managers are still in, but they're incentivized to be still in the market, right?
Well, cash is 1.4% of total assets. My argument is, and I was thinking about this yesterday, when people say, why do you hold cash? And it's easy, because I might be wrong. Right. First of all, if I make a mistake, I'm a real idiot if I go, I'm fully invested in the market's dropped 30%.
Yeah.
Right. Now, most people don't actually have cash. What they do is they just dollar cost average in their super.
Well, that's what I was just about to say. They just don't worry about it and they chuck it in.
That's exactly right. Yeah. And the second reason to hold cash is, what if something comes along?
Yeah. We've had more people reach out the last few weeks about their super than ever before.
Right.
And it's obviously because the US has taken a bit of a dive. And well, the Australian market's down, it was down 12% last time I looked.
Yeah. What's happened is the Australian super funds have performed quite well over the last decade, but mainly because they've shoveled the money into the US, right? Yeah. And so the US is going gangbusters. Hey, we're making great returns. But if you look at the Australian steering market, it's terrible.
Yeah.
It's miserable.
It's almost multiplied because they invested in the US market and everything's dropping at the same time. So
this is where you start to see the rubber hit the road when the US declines. You can see how you can judge a little bit how good a fund manager is, not necessarily by just making a lot of money still, but by saying we're not, we're falling less than the market. That can be even if the market falls 20 and a fund manager falls 2, you might be able to look at it and go, well, he was smart or she was smart because they got out early and they knew what they were doing.
That's incredible. Like what people fail to realize is that how difficult it is to beat a market when it's that volatile.
Absolutely. But also when you're running a super fund with billions of dollars, you can't just sort of move that quickly, right? It's just hard because it's a lump, it's a big lump of money.
Yeah. Well, if you want to if people want to talk to us about super, they can do as well, just to throw that one out there. Bonus section. You got a pretty little chart here, mate.
Yeah, just showing you the size of the United States defence budget. I mean, it dwarfs everybody else.
So what is this, 968 billion?
So it's nearly $1 trillion, right? China's 235 and Russia's 145. That's a third, right? That's a third of the US. And then if you add, well, I was going to say friendly countries, but, that's a bit of a stretch. But if you said, well, Japan's on the US, Germany's on the US, Australia,
UK,
you start to see that we're dwarfing China and Russia. But, warfare's not just spending money and building aeroplanes. There's a whole now, warfare's morphed into infrastructure disruption, much more public propaganda, eating away the United States from within rather than thinking, we got to go over there and bomb them. It's like, no, just create chaos within. And that's what's sort of going on with the Russian propaganda stuff, right? Setting Americans against each other.
Never seen that before.
Back to the 60s.
Yeah. Lesson of the week. So this is market crash timeline, the growth of a dollar on the US stock market, real peak values. Is this just basically explaining how long it takes to get back to average?
Yeah.
Yeah.
You hear this, the stocks only go up, property only goes up. And it's like, please look at long-term charts. Don't look at starting in 1870 to 2020 because you're not there for 150 years. Look at periods like 1970 to 1990 where it went nowhere. Look at periods where 1930 to 1954 it went nowhere. They're long periods of time.
Yeah, so let's use the 1970 for example. So you're born in 1950, you're just starting to invest in 1970 and you're 20 years old and going, I'll throw some money in here.
Yeah.
And it just goes nowhere for
a long time.
Yeah. And then you're 40 by the time you start earning money.
Yep. And people will argue, and I hear this a lot, but if you use the accumulation index, right, reinvesting dividends and stuff, and I understand that, but there's still inflation and fees, and no matter, you can slice the apple whichever way you want. The fact is people's long-term returns are still shithouse and about 2 or 3% in an accumulation index. So it's like, well, okay, that's not a lot of accumulation in my book.
Yeah. And if you map CAPE ratios over this, then you'd see...
Exactly.
Yeah.
There's good periods and bad periods.
Yeah.
Right?
All right. Well, let's... did you want to cover low-cost Chinese cars or shall we move on to the questions?
Well, just showing you there, Russia imposes fees to stem the flood of low-cost Chinese cars. They now estimate there's something like 700,000 or there's a lot of... Chinese EVs sitting in Russia. And what I'm pointing out here is the problem for the Chinese is they can't go to the rest of the world and flood them with EVs because this is what you get. Those countries say, dude, we want to build our own. We don't want yours. So this is why I say there's a lot of geopolitics coming up. Brazil, Indonesia, those countries with big populations are now saying, well, we want to run our own industries, right? So it's, that's why I say to you, there's a bucket load of uncertainty about, and it's going to be tough.
China's going to be in a pickle if everyone turns taps off.
Absolutely.
All right. Well, as I said before, so we ran a State of the Union last week. I wanted to cover these questions here, Steve, because we couldn't get to all of them on the call. And there's some quite good questions. There's some interesting things for you to talk about as well. I'm not sure if we'll get through all of them, but we'll see how we go. So the first one I've got here, is there a particular sector in the ASX that you'd recommend moving into in the coming months versus cash?
Energy.
Easy. Next.
But to be honest, I think energy is probably globally is very cheap, and commodities. Go and have a look. I think I mentioned this last week or maybe the week before, but, go and have a look at some of Australia's big energy companies. Some of them are pretty cheap.
Yeah. Where's this one? Next one here. God, you guys need to learn how to spell. All the listeners. Which ETF for a 43-year-old on 190K?
Well, it's not really about which ETF. It's really about how much do you put in and asset allocation and stuff. But generally, the index ETFs or the sector ETFs are best. And by the sectors, generally I mean the quote normal ones. So don't do global robotics, medical marijuana ETF. Those things, those specialised category ones usually are
A little bit trickier too.
Well, yeah, I won't say they're a scam, but they're very specialised, and generally they fade after, like they're a bit of a fad thing, right? And then they blow up, and you wish you'd have invested in consumer staples, right?
Yeah.
But generally, you can't go wrong with an index, right? If you buy something like Vanguard Australian shares, right? The way to make money out of it is to rebalance more regularly, right? Or be a bit more prudent about when you buy it.
Yeah.
Not just mindlessly, $100 a month, or, don't dollar cost average, because if the volatility is bad, you're going to reduce your returns. Hence the reason why we say to people, go and learn.
Yeah. Get a couple more indicators. Keep it up, boys. You help more people than you realise. Thank you. Appreciate that. How can we change the economy from residential property driven to productive assets at the forefront?
Government policy. Make it harder for investors to invest in residential property, and incentivise business to do businesses. I think we're moving that way.
Well, what do you reckon to Dutton's using super to buy property?
Yeah, but Albo, I think, came out today with more stuff about helping first home buyers, subsidies and stuff. It's completely the wrong thing to do.
Yeah, it's just going to drive prices higher.
Yeah. So, but, if I'm a landlord, I'm going, great. Yeah. If I want to sell a property, I'm going, fantastic, Albo, pour more liquid on the fire.
Yeah.
But generally, it requires what Australia never had, which is an industry policy, right? Which we're getting a little bit of. Critical minerals, we're trying to, at the moment, every country is trying to see how they fit into the new world order, right? And Australia's got a really, really tough gig. And the reason why is because China is our economic partner, but the US is our strategic partner. And that doesn't work, right? It simply won't work, because the Chinese will be saying, okay, we like this and this is really good. We want to get more involved in your economy, quote unquote, and i.e., industrial espionage and all that sort of stuff. And the Americans will be saying, what are you doing all that stuff with the Chinese for? You should be dealing with us. That's what Donald Trump's doing, right? He's basically saying to Canada and Mexico, if you want to be part of the triumvirate here, you got to get rid of China, because China will use Canada and Mexico to get into the United States, right? And that's why I say we got to, the economists going, oh, we just need to fix up this trade issue. Is like, guys, you are completely wrong. We are talking about a separation of the global order. It's not about, we'll just tweak the tariffs and then we'll all be friends again. It's like, sorry, that's not the way it is.
Well, the economists don't want to talk about that because they'll probably get they won't get publicised or whatever.
Well, yeah, but also too, you've got to remember the majority, like we're saying with the tariffs, right? A majority of them go, they're terrible. And it's like, okay, why? Oh, because it stops free trade. Well, what about the people in Alabama who say, well, yeah, good, because I want a bloody job for my kids. They might say, I don't give a shit if I pay $5,000 more for an American car. It's an American car and my kid's working at the factory.
Yeah.
right? Whereas like we said before, the globalists, they're the ones going, oh, I want to be able to buy Romanian, seashells. It's like, well, bully for you, right? That's what I'm saying. That it's not we're not in economic arguments anymore. So when they're all talking about the damage for the tariffs and all that sort of stuff, it's like, guys, you're missing the point.
So industry policy.
Absolutely.
Is the answer to that one.
Yeah.
Recommendations for new investors in a 12-month focus. I think you've already answered that. Energy ETFs, a little bit more defensive.
Yeah.
Yeah. Europe, emerging markets. With downward trends starting in the US, where should a beginning investor start putting money for longer-term investments? Similar thing.
Yep. On that point, look globally, excuse me, outside the US. So again, you look at cheap Cape ratio countries, Brazil, Poland, China, Spain. There's a few others there. Brazil's had our well-to strategies
It's
kicked it.
killing it.
Yeah, it's kicked it. We talked about Brazil and come on, Stephen, Mexico.
It's doing well.
They've done really well. Now, that's not a recommendation.
Who would have thought that we actually know what we're talking about?
There you go.
It's crazy, isn't it? This is a good one. So can you talk about whether to buy ETFs such as BBUS and BBOZ? Maybe start with explaining what that is.
Yeah. BBOZ and BBUS are inverse leveraged ETFs that short the market.
So the S&P goes down and they go up.
That's right. Yeah. I want the market to crash 20% because my inverse ETF, BBUS, it will go up 45 or 50%, right, because of the leverage. As we've explained, you have to think about the way you want to short the market, whether you want to do it as insurance, right? I'm going to pay $100 a month like I do for my car, and it's annoying because I'm losing, quote unquote, $100 a month. But if my car crashes, it's going to save me 35 grand, right? That's the way you work it. Or if in markets, what you might do is say, well, the markets are really horrible, but what I'll do is I've got 10,000, I'll put 8,000 into the market, right, to go long, right, if the market goes up, but I'm going to put 2,000 in the market with an inverse ETF. So if it falls, I can say, all right, well, that's a sort of, I'm going to make money out of my short. My long is going down $1,000. My short will go up $400. Now I'm still down $600, but I'm not down $1,000.
Yeah.
Right. That's the sort of general idea. There's that, or you which I don't recommend, but it's like trying to time the market to say I'm actually going to try and make money out of shorting the market, which is pretty tough.
You need to kind of a separate strategy altogether with that, understanding what the Cape ratio is at certain times, and it's hard to do. It's
hard to do, but you can use it systematically, which is what we look at in Well One, because it adds to your wealth overall, but you have to know what you're doing. Right. And the reason why is because when it starts going down, people start going, I'm going to put more in. And it's like, no, stop. You've got to have a plan with it. Right. So again, you've got to be really systematic, because what you'll do is you'll emotionally get annoyed because it's falling.
And it can fall a long way.
Absolutely. These things have been, they've fallen 80%, 90%.
Yeah, dollar cost averaging into something like a leveraged inverse ETF.
Got to be really careful.
Shocking.
Yeah.
Is cash king again?
Yes.
Would you consider?
Well, it will be.
It will be eventually. Would you consider buying the dip via an ETF, for example, NDQ, given the recent decline led by the Mag 7?
No.
Why?
Valuation's batshit crazy. NDQ is a Mag 7 ETF or a NASDAQ 100 ETF in Australia. Don't go anywhere near it. Cool. That's not advice. My argument is
you won't be going anywhere near it.
I'm not going anywhere near it, right? they've had spectacular runs, and sure, it might keep going, but again, I look at the probability and go, they're all the Mag 7 are now starting, Tesla's gone down 45, the others are starting to fall. That's when, you can blink and it's down 60, right? And as I say, just remember, somebody bought those Tesla shares at $450 and they're now sitting on 260 or whatever it is. So in other words, those people are looking at it going, I now need a 45% fall needs about 60 odd percent to get back to
it might be even more.
Even more, yeah. Yeah, probably about 80%.
Yeah.
So, and if you think Tesla's going to go up 80% really quickly, okay.
In the current circumstances.
Yeah, whereas, people are smashing Teslas, they're keying Teslas.
Countries are saying we're not buying them.
Well, the sales have collapsed. They've just recalled 46,000 Cybertrucks.
That's all that they sold.
Yeah. Which I must admit, I was shocked. If you'd have said to me, oh, mate, they've sold 500,000, I'd have gone, oh, yeah, well, that's about right. But they've only sold 46,000. If you look at Twitter, mate, you'd think every bastard's under 30's bought a bloody Cybertruck.
I must admit, I was looking at them at the time.
Oh, mate, they're garbage.
They're shit house, yeah. Oh, anyway, where to start reading to understand global markets a little bit better?
Oh, geez, that's a tough one.
How many books you got?
Yeah. Look, I think you'd be better off. I always start with Robert Schiller's Irrational Exuberance. I always think it's a really good macro background. The issue I've been talking about, as you know, with the last 1 or 2 years is politics is going to become a lot more important than business. And that's why I said before, we're going to have to get used to a world where there's a lot more politics involved rather than just freedom of movement of capital and all of that stuff, right? So again, why I'm saying economists, I think, are wrong in going down the path of, we just need to get these tariffs sorted out. It's like, guys, the underlying issue is we don't want Chinese products. That's the underlying issue. Stop talking about as if that, we'll just get the right tariff balance and then we'll let their EVs in. It's like, no, that's not the way it's going to work, right? And that's where a lot of people are going to have to get used to it. So, I think it's one of those things where you just got to read and read and read and start to come to your own conclusions.
Is there a couple of books or websites that are good?
Oh, look, not off the top of my head. Look, there's one I subscribe to called Geopolitical Futures, right? Run by a guy called George Friedman. He's really good. He's written a couple of, go and just Google him. He's written books like The Next Decade, The Next 100 Years, The Storm Before the Calm, which was his last one about America. Great read. The other guy is Peter Zehan. He's another one who does a sort of daily video and stuff. He's pretty good. He's studied under Friedman. So they're largely sort of the same. But you get a good handle on the global politics and the geopolitics of what's going on.
Okay, cool. They're good. And you mentioned Meb Faber as well.
Yeah, Meb Faber is pretty good in terms of global valuations and markets and stuff. But as I say, I think you're going to have to bone up a bit on politics, which is, it's not something you do in 6 months and go, cool, I got it. They're the things you got to really...
I'd be interested in.
Well, yeah, because, when you get into global politics, there's, second and third and fourth level thinking going on, right? And, the stuff you read in the newspaper, don't pay attention to it because it's probably got nothing to do with it.
Yeah. Is investing in the US not the right time at the moment? Is VDHG, the ETF, the way to go mid-40s?
I'm not in the US at the moment. Well, I am. I'm short.
Yeah.
and I'm in front.
Yeah.
So but seriously, the Cape's 35. They've had a 15-year bull market. Okay, if you want to invest in that, fine. But I reckon you're asking for it.
You're waiting a long time to get back to where you where you were.
Well, it's just, you just look at it and say the expected return is probably about 2 or 1%. In the last decade that it went that high, you lost 5% per year, right? From 2000 to 2010, right? You lost 50%. Okay, well, why is it different this time? And we're going into a world that's no longer even globalised. So,
That no one really understands as well.
Absolutely. So there's high uncertainty. That's why I'm sort of saying, look, if you don't know what you're doing, don't think you're being a weakie if you're in cash or heavily in cash, because, you forward 6 or 12 months, you might look like you're being really sensible.
Yeah. I think we've already answered this. Basically, this guy's asking, have the recent decreases in the S&P 500 put it into an affordable range again?
No.
Also, is investing in it currently truly diversified for an international portion of your portfolio?
No.
What are some ETFs listed on the ASX that invest in emerging markets, for example, Brazil? I think this is what people are asking. How do people start to look at the emerging markets more? What's a good platform to use?
Okay. All you have to do is go in and Google and go Brazilian ETF, right?
Yeah,
and I can tell you, EWZ, right? And Australia is EW, I'm inclined to say A, but I think EWA is Argentina. Anyway, my point being, just go and Google them, right? Indonesian ETF, right? Now, Australia's got limited ETFs in overseas indexes. We've got American. I think there's IVV as one of them, right? There's another one. I don't know why. We've got something about Korea. There's one about the top 50 companies in Korea, I think. That's about. I do most of mine from my American platform, not from my Australian one.
In something like Interactive Brokers has access to all of them.
Yeah, but the question is, go and look at the CAPE ratio of emerging markets. Again, we talked about the cheap ones, right? Go and look there. Then go and, the Brazilian ETF currently pays about 8% dividend.
Yeah, it's excellent.
That's not to be sneezed at. And I think it's already up about 20% this year. So, but my point being, you're probably better off looking at a US platform for that, although they're growing, right? They're growing.
Yep. Cool. Well, we've got through them. Well done, Steve. Thank you. We love answering these questions. If you've got any more, send them through to either our email or we're a lot more active on Instagram. So go there. But other than that, we'll see you next week.
Cheers, folks.
As always, remember, we don't provide financial advice.